Hi there, thanks for stopping by. Let's look at 3 ETF retirement portfolio, the simplest strategy for long-term future wealth. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this honest, valuable information for free. Now let's continue. If you've ever felt overwhelmed by the idea of building a retirement portfolio, especially one that actually supports long-term future wealth, then this video is going to feel like a deep breath of clarity. Because today, we're breaking down something that most people assume is complicated, but really doesn't need to be. We're talking about the 3 ETF retirement portfolio, and why it's the simplest strategy for long-term future wealth, long-term income stability, and long-term financial confidence. Now, if you're watching this, you're probably not looking for shortcuts or hype. You're looking for something that makes sense. A strategy you can explain, stick to, and trust. And more importantly, a strategy that isn't built on guessing or chasing short-term trends. That's exactly why so many long-term investors, including retirees, are moving towards simple, diversified ETF portfolios. And more specifically, toward a well-structured 3 ETF allocation that balances growth, income, and risk in a way that's easy to maintain, and even easier to understand. But before we walk through each ETF category and how to structure them, let's start with the real problem most people face when trying to build retirement wealth. It's not that people don't want to invest. In fact, most people today want to grow wealth more than ever. The problem is the noise. Constant predictions, endless, hot stock lists, contradictory advice, and this pressure to feel like you need a finance degree just to choose a retirement account. And ironically, the more choices people have, the harder it becomes to take action. That's where the 3 ETF retirement portfolio stands out. It cuts through that noise and gives you clarity. Because when you understand how to pair 3 core ETFs together, 1 broad market equity ETF, 1 international or global diversification ETF, and 1 bond or income stability ETF, you instantly shift from overwhelmed to confident. And confidence is the real foundation of long-term investing. To truly master this, we first need to understand what an ETF actually does for a retirement investor. An ETF, or exchange-traded fund, is essentially a basket of hundreds or even thousands of companies or bonds bundled into one investment. That means instant diversification. 1 click, and you're invested across entire sectors, countries, and industries. And the moment you embrace the power of diversification, your retirement investing stops being a guessing game and starts feeling like a clear, strategic plan. So let's start from the heart of the strategy, the broad market ETF. This is the engine of long-term future wealth. It's the piece of the portfolio built for growth, built for compounding, and built to carry the financial weight of a 20 or 30-year retirement horizon. When people think about broad market ETFs, they often think about something like an S&P 500 ETF or a total market ETF. And the truth is, either category can work beautifully. What matters is that you're capturing the long-term growth of the U.S. economy, because historically, that has been one of the most reliable sources of wealth creation on the planet. When you own a broad market ETF inside your retirement portfolio, you're essentially saying, I believe in long-term growth. I believe in innovation. I believe in U.S. companies continuing to lead. And whether you're 30 years from retirement or already retired, but looking to maintain steady growth, this part of the portfolio is what helps your wealth keep pace with inflation and support your future spending needs. But here's where the transformation truly begins. As powerful as a US broad market ETF is, relying entirely on one country, no matter how strong, still exposes you to concentrated risk. That's where the second ETF enters the picture: global or international diversification. And this is where a lot of investors misunderstand the purpose. It's not about chasing returns in emerging markets or guessing which region will outperform next year. It's about protecting your long-term future wealth by spreading your exposure across multiple economies. Think of it this way. If your retirement portfolio is a house, your broad market ETF is the main structure, and your international ETF is the reinforcement that keeps that structure stable when global conditions shift. Over the next 20 to 30 years, no one knows which countries will lead in innovation, manufacturing, artificial intelligence, energy, or healthcare. But a diversified global ETF makes sure your wealth participates in the growth wherever it happens. And that's the kind of strategic thinking that long-term retirement investors use to stay ahead. Now let's connect this naturally to the final piece of the 3 ETF retirement portfolio, the bond or fixed income ETF. And this is where a lot of retirement investors have a moment of relief, because this category provides something the other two don't: stability. This ETF isn't designed to maximize returns. It's designed to minimize panic, smooth volatility, and create a financial buffer that protects your retirement lifestyle. People sometimes think of bonds as boring, but boring is a feature, not a flaw. When the stock market drops, that stability ETF is what prevents your entire retirement portfolio from sinking at the same pace. It softens the impact. It creates a balance. And whether you're nearing retirement or already retired, that stability is priceless. It transforms your portfolio from a ride-the-roller-coaster experience into something you can actually count on without emotional stress. Now that we've defined each component, let's bring them together inside one simple structure so it all feels connected. Because the power of the 3 ETF retirement portfolio isn't the number 3. It's the way these 3 pieces complement each other. Growth, global diversification, stability. Together, they create a long-term future wealth strategy that's simple, rational, and durable. Imagine your portfolio as a triangle. On one side, you have growth. On the second side, you have global exposure. On the third side, you have stability. And when those 3 sides are balanced, the structure becomes strong enough to handle decades of market cycles. And for retirement investors, strength and simplicity usually outperform complexity and prediction. Now let's pause for a moment here, because before you implement a strategy like this, there's a mistake that could cost you more than you think. And that mistake is assuming there's a single perfect allocation. A lot of people get stuck trying to calculate the exact percentage down to the decimal point. And the truth is, allocations don't have to be perfect to work. What matters is choosing a structure that aligns with your time horizon, your risk tolerance, and your financial goals. For example, someone decades away from retirement may choose to give more weight to the broad market ETF for long-term future wealth growth. Someone closer to retirement might shift a bit more into bonds to reduce volatility. But the core structure, the 3 ETF approach, remains the same. And that's what makes it evergreen. It adapts without needing to be rebuilt. Another common mistake is switching ETFs too often. The whole power of this strategy comes from letting compounding do its job. Replacing ETFs every few months doesn't give the portfolio enough time to work. And the last mistake worth mentioning is chasing yield inside retirement accounts. High-yield choices often bring higher risk, and that risk usually shows up at the worst possible time. Sticking with broad, diversified ETFs is what keeps your long-term wealth protected. Now let's bring the conversation back to the transformation this strategy offers, because this isn't just about building a portfolio. It's about shifting your mindset around retirement investing altogether. When you remove complexity, decision fatigue disappears. When you remove endless choices, clarity emerges. When you have a simple structure, you become consistent. And consistency, not timing, not prediction, is what builds real retirement wealth. Over time, this 3 ETF structure becomes more than just a portfolio. It becomes a system you can contribute to monthly without overthinking it, a system you can maintain without constant adjustments, a system that grows with you and supports you, whether markets are calm or chaotic. And here's the part that surprises a lot of people. Simplicity often outperforms complexity, not because it's perfect, but because it removes human errors. It removes reactive decisions. It removes the emotional roller coaster that often derails even the smartest investors. And when you remove all of that, what's left is pure long-term growth. As we move toward the closing, let's recap everything we've covered, because repetition helps lock the strategy into place. We started with the problem: too many investing choices and too much noise, which makes retirement planning overwhelming. Then we introduced the solution: the 3 ETF retirement portfolio, the simplest strategy for long-term future wealth. We broke down each component: the broad market ETF for growth, the international ETF for global balance, and the bond ETF for stability. Then we connected them into a unified structure that supports long-term wealth, retirement security, and financial confidence. And finally, we covered the biggest mistakes to avoid before implementing this strategy. If you found this breakdown helpful and you want more content on building long-term retirement wealth, ETF strategies, and simple investing systems that anyone can use, make sure to subscribe to the channel. Take a moment to click the thumbs up button. It really helps the video reach more people. And drop a comment below sharing where you are in your retirement journey or what part of your portfolio you're working on. Thanks for watching, and I'll see you in the next video.